There we go. Good morning. Good morning. Good morning, everyone. How's everybody doing? Sorry for being a bit late. YouTube had to like kickstart it like an old motorcycle. Apologies. Folks, and to make matters worse, this session's going to be a little shorter than usual because I have to cut out early to go do a podcast. It'll be a good one. So we haven't done a podcast in a while, and Steve's got a hell of a guest for us today. So we'll be cutting it short basically at 9:45, just so I can just go prep. Let's get right into it so let's not waste any time. All right, overnight inventory, ladies and gentlemen, right? Our overnight inventory is long. Well, right now it's long. Even though the point of control hasn't moved up yet, we've taken a good amount of this, and you'll see that that point of control will probably move up before the open, right? We still have 25 minutes. So if this blue moves up here, that's good distribution over 58.25 and a quarter. The other thing is yesterday's high was 58.25 and a half. So if we open above that, we're going to open on a gap. So if we opened here at 58.30, we'd be opening up on a gap, right? So what does that mean? You look to see if gaps fill. This gap has not filled yet because that is a short position. And remember that Thursday is month end, right? So the podcast will be done, recorded, and then it'll be put out on the Confessions of the Market Maker YouTube page and Spotify and all that good stuff. So opening on a gap, what does that mean? Opening on a gap means that there are buyers underneath the gap. Who would those buyers be on a day like this? Well, they'd be short sellers. That's why you noticed when we came down here and we couldn't get to VWAP and we couldn't stay inside the previous day's range, the market rotated higher because they pulled the offer, right? When you pull the offer, it means you see buyers and you're going to make people pay more, right? If you run out of buyers, you'll push the offer lower to capture those buyers, right? And capture their money. Remember, the people in this business, think of them as merchants. Merchants have an inventory of stock. They need to sell that stock at higher prices for profit. But of course, if they can't sell it here, they'll turn around and sell it back down to their cost basis. This is commerce. The chart is a sales chart. That's all it is. It's telling you how sales are going. Here by a half an hour time frame, here on a minute by minute time frame, it's telling you how sales are going. And in this case, it's of ES contracts. Okay. So what we're looking for, right? Our overnight point of control is still down here at 58.11 and a half. We need to print 3,200 contracts somewhere in here to move the value area up, to move the cost basis higher, right? Fast is going good, Christian. I'm on the third day now, so it's kind of smooth sailing. The first 2 days are rough. The second day is the worst because you're just loopy, right? It's like You're like Bill Murray in Stripes, where I shouldn't have drunk all that cough syrup. But the third day, things start to work. All right, trades off the open. What are we going to do trading? If we open here, we're opening on a gap. Okay. I would suggest using the levels to trade. What does that mean? It means, okay, if you're looking for a short, I would be looking, see, we're in, and why am I thinking short? Well, because inventory is getting a little long. There's balance at 58.05 to 8, double it to 13, double it again to 23. So this is basically 4 times profit. And now this is 8 times profit. So my target is 58.43. So the trades I like are when inventory corrects, right? And we get something like a look above and fail of a level or at the edge of balance. For beginning traders, try and wait till the edge of balance. You get better results. But right here, you can see we're 1, 2, 3, 4. We're in the 4, we're halfway point. Where we looked above, look at the seller. Boom, 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 boom. Seller pushed price down. Boom, 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 boom. Sellers are competing. That's what you want to short into, right? You don't want to short the front side of the move. You want to short the back side of the move. Why do you want to short the backside of the move? Because the sellers have revealed that they are desperate to get rid of their inventory, right? You don't want to short a market where everyone's trying to buy it, right? So if you had shorted, say you had taken a short here at 30, 31, put your stop at 33, cover a little at 30, cover a little at 28, and when it fails to actually tag 25 and a half, cover the balance here, right? They front ran VWAP. What does that mean? That means the buyers stepped in before VWAP because they were desperate to cover, and they didn't see that much liquidating inventory. So if you're long, now I want you guys to think about, I was on a one-on-one call this morning, and we were talking about the mechanics of a trade. So when you're long, right, the trade to go long is the execution of a business strategy. The first part of that strategy is to acquire your inventory. Where would you do that? You would do that once you see other people's acquiring with size. How do you see that? Because the market stops going lower. That's the simple part. Then what you do is you decide, okay, I'm going to get long, so I'm acquiring my inventory. Now, the first thing that you do after you've acquired it is you pay your insurance. So you put your stop there. That's your exit. So if this business plan does not go well, this is my insurance, right? I will have the cost of doing business is the difference in price between my entry and my exit. That is what we call, that's a fixed cost or whatever you want to call it. That's business. You've got to do that. You've got to put your stop in. So you're long, that's where you've acquired your inventory. Your stop, that's your insurance policy on the transaction. Then you put your sell orders in because that's the second part of the trade. The second part of the business plan is to dispose of your inventory for a profit. That allows your business plan to work. Try thinking about trades that way. It'll help you from taking bad trades. It'll help you from trading at the wrong time. It'll also help you manage your expectations when you're in a trade. Hope that makes sense. Hey, Moran, good morning. How are you? If you think of every trade as the execution of a business strategy, right? It's the execution of a business strategy. Keep it simple. This way you can visualize it too. Because unfortunately, for when we're retail trading, there's no urgency, right? There's no sense of urgency as to what you're going. A lot of people tell me, "Oh, you're just pushing buttons." Yeah, okay. So when you push that button, right, you are executing a business strategy which is backed by capital, your capital, right? So there automatically has to be some sort of way to protect your capital because that business idea has to have an insurance plan. Just like you wouldn't open in a McDonald's and not have insurance for some knucklehead slips and falls in the bathroom and sues you, there goes your entire business, right? If you visualize trading as the business it actually is, right? The business that actually exists, and it's hard to visualize that. That's why I talk about this stuff, right? Because if you can visualize it, it'll help you understand what's going on, and you'll understand that none of it is random, right? Who randomly throws around $1 billion? Nobody does, right? Every trade is a business strategy being executed. Now, sometimes in business, things don't go the way we want. That's why you have a stop. That's your insurance. The added benefit a stop gives you is it also gives you information. It gives you information on the timing of your trade, of your reading of the inventory, and how it's reacting to the order flow. Now, that sounds fancy. It's not. Order flow just means customers. So the customers are coming in, are they buying or are they selling? We have inventory for sale, right? Our inventory right now is underneath 5823, right? What is inventory? It is time and volume traded of a product, right? Transactions. Right now, what's the goal is to take that inventory and sell it for a profit. Very simple, right? But not easy. Very simple, but not easy. Because they've trained us, and here's my tinfoil hat, right? I can blame it on the fasting. They've trained us to be consumers. They've not trained us to be distributors. That's why retail traders have trouble because they're thinking like a consumer instead of thinking like a business professional. And that's why they've invented all of these excuses for lack of discipline like tilt and FOMO and revenge. None of those terms you'll ever hear in a regular business. What do you do for a living? Well, I sell insurance. Will you ever do any FOMO insurance sales? What do you do for a living? I install tile. Have you ever done any revenge tiling? What do you do for a living? I'm a baker. Hey, you ever done any revenge baking? That's when you bake food that makes people sick. You're not going to be in business very long. Think about it. Okay? Hey, Josh, what's going on? It's my goal to get rid of those words out of trading. Let's see if we can move that point of control up. I got to say, here's another thing I do in the morning. I come in and I go, you know what? What's my bias? Right now, I'm short biased, right? Because everything's being held up by short sellers. So I know those bids are shaky. All we got to do is come down here and show them some size at 58.25. This thing will fold like a card table, right? So We need order flow to keep it above 58.26. If we get that order flow, right? If you're short, let's do some scenarios off the open, right? If you go short off the open, say it opens here, boom, you're short. Where's your stop? Your upper stop's going to be 58.32 and 3/4. That is that X high, right? Which is right around here. That's your sort of warning label, right? Warning, right? So if you're short and the market starts offering 33, then it's like warning, 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 and your hard stop's going to be the overnight high. Because if it takes out that overnight high and stays over the overnight high, there's no reason for you to be short. There's no sale, right? So if you're short, where's your target? Aha. So say you're short here and it comes down, right? What you're going to be looking for is 58.28 for first target. And then as you get into the 26s, there are going to be bids here. They're going to be buy orders at the previous day high because that's where the short sellers are going to be bid to cover. They'll all be sitting there waiting like dogs for a piece of turkey to fall off the counter. They'll all be waiting there. Okay? So that's not a bad little trade. Say you shorted 31 with a 32.5 warning or 33.5 out, right? So you're short 31 and you can cover some at 28, some at 27. That's not a bad trade. Start the day off. I am not a fan of going long at the highs because here we are in the 8 times profit zone. You see that? We're in 8 times profit. So if I go long here, I might expect 36, maybe 38, right? So you're already buying it at 8 times cost basis. Do you guys? That's why I have these zones up. It helps keep us grounded. So you're not just chasing trades, right? Hopefully that makes sense. And if you do go long, well, of course, your first target is 34, 34.25, which is that overnight high. So say you went long at 31, right? Where are you going to put your stop? Well, that's another hard part. Structurally, I'd say here, if you were long 31, your stop should be just maybe 29.75, 30. And you know that there's going to be some sellers at 33, and you know there's going to be sellers at the overnight high. So manage that trade. Don't be delusional when it gets up there. And if you get up to 33 and they start pounding into it, get out. How do you get the levels in the zone? I publish them every day in our trading room. And I've got videos and all sorts of things on how to do it. What you're doing is you're looking for two-sided trade. And then you just double it. It's pretty easy, actually. It's a simple concept, right? And then you just get better at it by being familiar with drawing the balance zones. So when you look for balance, you look for a high and a low. And when we look below that low, you go right back to that high. Like this right here is a balance area. Not a big one, but there is a balance here. Two-sided trade. That's balance. That's balance, right? This is a trend. This is when you move, there's a little balance here. Balance happens when you accumulate and then when you distribute. Hey, Mattis, how you doing? So going long here, what else is going on, right? So when you come into a market, you want to suss out where the sellers are. They're right there, right? They're not hiding anything, right? The sellers are right here. Every time we get close to 33, boom, they come in. That's where they're competing, right? And they stop selling when we get just to this 30, 30 and a quarter, and then they lift the offer. So that's a rotation. Oh, no problem, Sing. I was a little late getting on. I had some technical issues. Had to reboot the old PC. Sometimes YouTube hangs. Let's open up my trading account. Oh boy. Hey, S-Pill, what's going on? How you doing? Remember, you don't have to trade the open, okay? It's not mandatory. Let the market open up. Let the market tell you what's going on. Get a sense of the business before you start throwing money around. It's not a race, right? You don't have to be first. So I'm looking for a gap fill. Let's see how trapped the shorts are. Now, what do you mean by that, JJ? What I mean is when we get down here, see, we're coming down here. See, look at that. See the bids right there. As soon as they saw those buyers, the offer lifted. Let's see if that holds. VWAP is here too, so there's going to be some buyers here, right? Just remember that if you are short, if you were short 31, you should have paid yourself by now. Pay yourself before the open because we don't know what kind of order flow is going to come in now. Larger traders, if we start filling these single prints, you can stay short, right? If you're short. But there's nothing wrong with a 3 to 5 point trade on 3 to 5 E-mini contracts, right? I will not be upset with that kind of a trade. There's VWAP. You're going to get a little bounce if there's any order flow. Oh, no. Look at that. If the single prints fill, you'll be looking for bids around 58.19, 58.20. So they went down and filled the gap pre-market. So if we open above yesterday's high, it's still a gap. Let's see where we open. Right? That 25 quarter is a big level for me. Let's see what happens. We open on a gap. Gap is filled. Now let's see how short these people are here when we come in. Okay, there are the bids. Bids are coming in. Right? Now, what am I doing? I'm looking for the seller. I know they're up there. Where's the next seller? Come on, show yourself. Are you at 29? No, they pre-sold 29, right? They front ran 29. Okay. If you're not a fast trader, just relax. You don't have to trade this. Okay. Wait till the market slows down a little bit. See, the seller was right there. Yeah, there's a little bit of a bid off the open, right? Look below and fail a VWAP. Rotation up to 29. There's some sellers there, right? Let's see if we take them out. We'll be looking at the 30s, right? But no, not just yet. Wonder what the breath is off the open. There you go, Aaron. There you go. But right now, I'm worried about the sellers at 29 and a quarter. If the sellers get desperate and the buyers run out, they'll start putting it on sale and we'll get underneath VWAP. VWAP's around 25. The singles are 23 quarter. There you go. Right there they go. There's a little desperation, but let's see if it lasts. I don't know. I do not have the 200 EMA on the screen, Pollux. I don't use EMAs. Not that there's anything wrong with EMAs. I just have never done the work on them. Thanks, Sam. My VWAP should be, oh, you know what? When I rebooted my computer, I didn't reset my VWAP. It should be, yeah, you're right. Thank you for pointing that out. My VWAP should be set at the Globex Open. Apologies. Thanks for catching that, Pollux. Much appreciated. When I rebooted the computer, I did not reset the VWAP at the Globex Open. If something like that happens, folks, call it out because remember, I rebooted right before the stream. There we go. Well, that changes things. Thanks for pointing that out. So we haven't even gotten close to VWAP, which is down at 17 and a half. Bid at the previous day high because that's where the shorts are trapped. If those shorts see sellers, they're going to drop their bids, right? So if you shorted the 27s, the 28s, put some bids in, pay yourself in the 26s, right? Maybe save a runner if you want, but just make sure you pay yourself today. Thursday is month end, Friday is the last trading day of the month. You should be in capital preservation mode and risk mode, where you want at the end of the month is when you want to protect the money that you made that month. That's okay, Dave. I'll let the large traders work this out. If you're short and we can't get back over the overnight high, we're going to go fill those single prints at around 22 and 3/4, right? If we get back over the overnight high, then you're in trouble. See, filled. Pushing past 22 is going to target this 19 half, 19/4. The order flow is very different compared to most trading days because it's the end of the month. So at the end of the month, large firms right? Let's call it smart money. What do? They pull in their sales, right? They don't do anything stupid. It's the end of the quarter. You don't want to do anything dumb to blow your quarter, right? Remember, professional traders don't subscribe to all this hoo-ha, right? Tilt, schmilt, twilt, all that crap. They run things like a business because it is a business. And if you don't run it like a business, guess what? You're out of the business. Well, they also have a fiduciary responsibility to the people they manage money for. You can't manage money and like trade like a drunk sailor on shore leave. Coming into VWAP, right? No Tony Montana trades, Alexander K. So they don't push it in the last week of the month, the last week of the quarter. There's VWAP to the tick on the 18s. Right? Now we're going to lift the offer a little bit. Let's see where the sellers step in. This is where I'm looking at. Do they step in at 23? Do they step in at 24 half? Right. So I'm just getting to know the market on the open, trading it small, right? Till you understand the order flow, get a sense of it, get a feel for it. Don't just go in there, right? Buying and selling everything you see. Trade small, be smart. Everybody says be patient, right? As soon as you tell people to be patient, they go and lose money, right? Be smart. Be smart about things. Now the shorts are going to come in and cover. If enough shorts come in and cover, wholesale will start going to the bid. Right? There's a seller. See, there's the seller right there. Bada bing, bada boom. There they are. Look, right there. 22. 22 seller bids at VWAP. If we clear out the 22s, look for 23, 23 and a half. Right? I'm quiet because there's nothing going on. Think of it, the market opened up and everyone went for coffee. Right? No trade yet for me. Let's see. I'm curious to see if we can do a look above and fail of 23. I'd be more interested into a short. But right now, I'm not really on the ball. There's 23. Now, I'm watching that 22. So if you shorted that, right? If you shorted that move as it went up and you hit it, right? Well, your out's going to be 23, right? Because if it accepts over 23, it'll probably go to the next area where they were selling, which is up here at 24 and a half, right? You don't want to be you don't want to be short under 23 if it's trading 25. That's just not worth the money, right? See, look how it's creeping over 23. Well, the seller came back. Good. What you want when you're shorting is you want an aggressive seller to come and just hammer those bids, right? But we don't have that yet. Right? You want to just have them just hammering it. Here they're lifting the offer. There's no reason to be short, right? So if I was short 22 against 23, I'd be scratching, right? Scratch it. It might come back down, but I'll wait till it comes back down to hit it again, right? Because I don't want to be shorting into an offer that's moving higher. Give it time, right? So say you shorted 21 and 3/4, 22, because you saw it drop underneath, right? If it starts creeping over 23, I know the business reason for that trade's it's not working. So I'd be taking risk off, right? See, I don't mind scratching a trade. It's not a big deal. I'd rather be wrong quick and scratch than get caught up in a drama. You might be seeing something that I'm not seeing, Aaron. I'm seeing a seller here, but I'm not seeing the aggression that I want underneath. So you're right. It might be a look below and fail and a rotation back up to 26, 28, right? And if I'm unclear, right? If I'm unclear, like I'm seeing sellers, but I'm not seeing the aggressive kind of seller I want, right? So if I'm unclear, I can just sit and wait. And if we clear the 24s, right, you can buy a little. And if we hold 23, we'll rotate up to that standard deviation and you can pop out of it, right? I don't like to overtrade. If the order flow is a little stronger, if we had a bit more customers, I wouldn't mind going long here, right? The other thing is my discipline's not that great today. So recognizing that, if I do take this trade, I'll take it with micros, right? And I'll try and maybe wait another candle or two, right? I see the bids moving higher because the lows are moving higher. Right? There's going to be some selling at that previous day high. See, there's that seller again, pesky seller, right? Sometimes it's choppy and you go long, you get stopped out. You go short, you get stopped out. Just leave it alone. You see what I'm saying? So I went short, I got stopped out. Then I was thinking about going long and I was like, no, man, there's still that seller at 24.5. It's not ready. The cake's not ready to come out of the oven. I would rather buy it over 25.5 and take it up to 30, right? I don't mind missing the low or the high of a market. And if it's choppy like this and I get stopped out, whoa, hello, right? There. Now we had a nice order come in. Let's see if we get back down to the close of business yesterday. This is the trade that I wanted off the open, but I didn't get it because my discipline was lacking. What I should have seen was the offer moving from here to here to here to here. Not as tuned in as I should have been in this morning. And that happens, right? I'm a little distracted thinking about the podcast, and my discipline is not the greatest. So when you recognize stuff like that, don't size up. If you catch yourself a little bit sloppy, if you catch yourself a little bit slow, right? Just step back, right? On look above and fails, if 23 fails, right, I'll be shorting 22. So I'll put a limit order out at 22, and when it pops back up, it'll grab it. And if the seller is there, if I'm short 22, then I want to see that seller step in and knock it down from 22 to 21 half, 21 quarter. I want to see that aggression, right? Does that make sense, Pollux? So I'm doing a look above and fail of 23. I'll be trying to short 22. In reality, I'll be shorting 21, 21 and a half. I need to eat food. You're funny. See, that seller should be still there at 20, right? 20, 22, 21. I'll put an order out at 22. I'll put one at 22, one at 21 and a half, and wherever I get a fill, I'll take it, right? I'll usually trade 2 to 3 contracts, right? So if I'm doing a look above and fail of 23, I'll put a sell order at 22 and maybe they'll take it. If I don't get taken, I might have to sell it at 21 and a half. You see? That's what I was talking about, being realistic about your fills. I'm not expecting to get 22, right? I'll put a sell order at 22, and if I get a fill, beautiful, because then my risk is only 4 ticks or 5 ticks. But in reality, I'll probably be hitting the 21 halves, 21 quarter, 21. You know what I mean, Pollux? Especially if it's choppy. Does that make sense? All right. We're kind of in slow motion here. So what I'm seeing is I'm seeing the sellers come in. So if you were short here, right? Yeah, I just use the DOM to put orders in. That's all. I don't use it to trade, right? I just use it for it's just for order entry. So say you're short 20 and a quarter, right? Put in a bid at 18 and a half, buy one back. Put in a bid at 18 and see if you get hit. Boom, there you go. Right? Simple. Right? Try and front run my levels, right? So you get a fill, right? So we saw the sellers compete, right? And that's when you trend line, guys and ladies. That's your trend line. That's when sellers are competing. That's when buyers are competing. The buyers are never fighting the sellers. It's a common misconception. Competing in slow motion, very slow, choppy competing, right? It's a slow day in Walmart, Moran. Okay, where are we looking for now? Lower targets. I'd say 14, 14 and a quarter, right? 14, 14 and a quarter is what I'm looking at. We're just kind of dropping in nicely. Just gentle liquidation. There you go. There's 14 and a quarter, 14, right? Beautiful. So larger shorts should take some back here, right? Always pay yourself. Always pay yourself, right? There'll be some buy orders at the close, not too many. Let's see, right? If we get underneath 14, let's see if we can tag that 13 out and come into the 2 times profit zone. There's the close. There's the front running of the close. Yeah, it's a way to hide. It's a slow, creepy market, but people are making money and it is tradable, right? So, when I was short the 20s, had I shorted a few more contracts, I would have covered, I'd have just used the levels to cover, right? So you're short your stop, right? Cover one, cover two, and cover three. If you have, you know, take your position and cut it into three. You always want to cover a little bit on the way down. That tells you how much selling there is in the market. Because say you're short 20 and you go put in an 18 buy order and that buy order doesn't get executed. Well, there's no supply. The market's going to rotate up. You got to, you know, think quick, right? You got to think quick. So I know a lot of people don't like scalping. I think scalping is an essential skill to learn. So you learn how to think quick. The other thing that you want to learn is how to get out of bad trades quickly, right? So you train yourself and have a procedure. When you go into a trade, you know exactly where the exit is. You know exactly what you're expecting for a price target. You have orders at those price targets. So if those orders do not get executed, it means your trade's not working, right? And that's that hello McFly moment, right? When the market tells you, hello McFly, nobody wants to buy your contracts, what do you got to do? Right? Most traders get stuck in trades because they're not paying attention to what the market's telling them, right? If you're long and your sell orders are not being executed, it means somebody is selling in front of you, stealing your customer. You are now a merchant when you are long. The first part of that business transaction is the acquisition of inventory. If you cannot successfully sell it where you want to, right, you have a responsibility to mark it down and get rid of it fast. Nice trade, Pollux. Yeah, couple of points here, couple of points here on 3 to 4 contracts. It adds up. Little look below and fail of 13, rotation up to 18. Right, that's another trade that we like. I hadn't see today. I'm lacking discipline, and I apologize. See, that was a perfect little look below and fail. So we've been in long 14, 14 and a half against 13. Sell a little bit as we go. It needs more time to get filled. Yeah, but how much time do you have? Sure, if you're a large trader, you can take the time, right? If you're a small trader, take your money. Don't worry, everybody wants to hold trades for longer, I know. But the order flow has to support that. If the order flow at the time doesn't support it, if the order flow at the time doesn't support what you are thinking is going to happen, then you're just being delusional, right? That's why when you're long, you got to be a seller. When you're short, you got to be a buyer. So the rotation from 13, we should hit some turbulence here at 22. Yeah, a lot can happen in 8 minutes, Aaron. If you told me I could trade in 60 to 90 seconds, make 2.5 to 3 points on 4 to 5 minis, do that twice or 3 times a day and be done. Thank you very much. What is that, a rhetorical question, Aaron? Remember, your win rate doesn't have to be that high as long as you're not a nutcase when it comes to losing money, right? That's the journey. And how quickly can you adapt when the market changes? How quickly do you adapt to changing order flow? Right? And that's the journey of retail trading. There's 23. We cleaned out the 22 sellers. What do you know? So that is a beautiful, picture perfect textbook look below and fail, right? Which I did not trade because I was mentally lazy. Look below, fail. First target, second target, third target, fourth target. That's the rotation. All right. Now, if this is a look above and fail, we should rotate under 20 down to 18 if you're short. So if you're short, say you're short 22, stop 23. If the market can stay offered under 22, you're golden. If not, manage your risk. Does that make sense? Simple. No reason to overcomplicate it. Data. Oh, I got to get going. All right, I'll let you guys go. I got to go do the podcast. I'll see you in a little bit. Thanks, everyone. I got to hop. Bye for now. Thank you for being with us. Come visit us at Microefutures.